Here's another example of market maker, what you call stop hunting. If you've got if you're trying to ride this move of the euro dollar up, it's not only a stop out, but it's a stop in trap. It's there's two kinds of traps going on here. Like, for instance, if you had a buy stop above the weekly high or yesterday's high, you went long the euro dollar about right here. So right about here, and this is the 15 minute, so you're okay, you're long, right? And maybe you took something off the table there. And maybe your target was only up here. It was a scalp. But maybe your target's up here. You're looking to make 200 pips on this trade. So you're in. Market comes up, comes back. And for whatever you've been thinking, so say you're going to reduce your risk and go to the 4-hour chart. So here you buy stop entry, bam, in, or you bought this pullback. So you're long. Well, guess you're all the way back to where you got in. You're all the way back to where you got in. So if you missed this move, you can still get in. Then you can see the 1-hour chart. Well, or this would be the stop hunt here for the, in other words, say you bought this breakout. Buy stop entry, you're long. You have your initial stop here. You start to trail it. You trail it too tight, they stop you out. Or for the guy that says, oh, I think it's going to go down. I'm going to sell just below this. And I'm expecting this market to just go down. Okay, well, on the 15, you can see that. This would be your stop on the 4-hour. This is your 1-hour chart, and you can totally see the there's 3 hours of support taken out, reversed. These are always more money. You make more money on this trade because you could have a stop back here than you'll ever make on a breakout, just a single breakout. Of course, that's not true from the standpoint if you really want to have 100 pips floating around in your account. Sure, you got in here, probably are going up here. In fact, I think we're going to take out these, or go to up to retest this, right? It's still a chunk of money. In other words, if this is your exit and you got in here at the breakout of this fractal, okay, so you still made 200 pips, right? You just have to be able to mentally withstand all this nonsense up and down. So I'm just going to get out here, take the money and run, because I don't ride these. I can't imagine riding this stuff. I don't want to do it. I just want to make the money and get out. Okay, so that's over. Bottom of the hour is coming. The whole thing could just turn around like a Doberman on you and smash down. So, this is 20 pips. That's plenty of money for me. If we do redip, I got completely dry powder, and I'm not the guy that can ride. There's some people that can do it. I'm gonna opt out. Of course, at the 100 pip handle here, to keep reloading the wagon here like an idiot is the best money in the world, because right around this price, for some reason, this is 107. Wow. Anything from 106 to 107 has been like the ripe, deep discount here. And go to the weekly. You've got a double bottom. This will be the first month. I think we're going to close up this month. We only got 1 week left. I think we're going to be hopefully up to here for all the people that bought down here and want to see their exit. And of course the monthly, an amazing, we're digging out of that hole. But this is the double bottom, and it's a double bottom on a trend line. So, and you've got a triangle forming now. If you connect the dots, connect the peaks and valleys, we're right here in the weekly picture. But it's always a picture within a picture. There isn't any type of, sadly, there is no right answer whether you should be a buyer or seller. This doesn't work like that because here was a double bottom on the 5 minute to buy to make 10, 20, 30 pips, maybe 40. And here is the 5 minute, breakdown. Here's the double bottom became a double top. You can't even tell. You can't see this story over here. You can't see that until you get to maybe, can't see it here. You'd have to go to the 15 minute, I think, is the only way you're ever going to see those confluences on the, yeah, you really can't see it here. It actually looks like this here. This little nub is this. This 15-minute swing top is one moment in time. There's 1 moment in time to here. So if you see that, here, let's try to stretch that out. My screen's not very big. I run my screen super low res. So these are like chunky. It's a chunky view, but see a little baby bottom. If you copy that line to the top, double click. Look at that window. You have a stop here. Maybe you got to stop up here at this last known peak. Here's the head and shoulders on the 15. And one of the big problems here is this stuff's happening so blistering fast. I mean, like on news days, you've got to be able to almost strategize on the fly, unless you haven't thought about what if you treat it like a chess game where you're thinking many moves ahead. This bottom becomes a top right on there, but you probably wouldn't get filled unless your broker had a super tight stop. But this window here, between this, there's a window there. So there are windows that when the market really heats up, you got to allow for that window. So you might want to be stopped totally out of position during that spike. Like this spike here. See, I got out because look at, watch pull back. Now we may plunge down here and pick up all these tickets, but if we don't, it's fine, right? Because I made money today, so that's all that matters. Making money every half hour is ideal, but you can't do it unless the market's on fire. Now, if the market goes and takes that top out, oh well. There's nothing I can do about it. It's Friday. Okay, here's a pullback. Here's a possible entry right here. So if I want to just nibble at it, I want to put a buy stop just above that, and then I would put a whole series of buy limits below. Now, this only lasts for 15 minutes. All these orders coming in here just last for 15 minutes. So I'm telling the market, you got 15 minutes to take a ramrod to smash down like this, and that's the market makers, what they call a stop hunt, but it's also a trap entry. You're being trapped by the market. Like, they're going to try to trap me on this one, but I'm not risking a lot. And my exit's right here. So when the market quiets down, you got to lower your expectations. What we've seen already today, and this is when today started. Of course, this was the slide last night into the, let me just finish up the story here of what happened. So here was the big, here's the 1 hour chart. This is a 1 hour chart. It's 24 bars. You have 25. If you only pull the trigger every hour, you can trade 24 positions, right? However size you pick. But this being the key rollover point, if you look at this baby top here, you can just run this right through the, actually, it's on the half hour. It looks a lot better. Let me scrunch this down a little bit. You see this thread running through the market here. But really, the key pivot is this here. And you can put up, you see, you have to kind of move these till you see the, I guess the trade wind, this is like got a trade wind to it. Like the market's being blown around by news and all that nonsense. But see if you can key in, if you can find the channel, but it's always a channel within the channel. So here's the current down. So we're correcting from that huge explosion where we took out this top. Right. So the half-hour breakdown, quite a bit of trades here. It actually plunged through that top, became a bottom. So that was last night's pullback. And I think like this is a key point here. Once we took out that, traps all the short traders that are getting in on, say, the 4-hour wick, or they're getting in on a 4-hour, making a lower low. And then here's the smack up, and then here was the big stop hunt here, where it comes down, cuts back in, and stops all those guys out. But in the 15, I mean, really, if you got the time, you want to trade the 5-minute chart, right? Because, okay, I'm slightly, I haven't gone long yet because I haven't got filled on this. So now that it's pulled back, I'm going to put in a tighter stop. Well, I'm actually putting 5 pip stops in here, so unfortunately, I have to buy and limit here if I'm going to get in about right there. So I'm going to get it right there. I got 15 minutes exposure on this. I just dropped one about 5 minutes ago, so as these things disappear, my risk disappears, and I'm not too... I mean, the energy is kind of fizzling out here as we as the market kind of comes into the close of Europe. Another thing with a 5-minute chart is you can draw these beautiful triangles that this gives you these beautiful no-brainer pivots, and you can see the last stop hunt would be here. They want to come after everything from that all the way down, and this is another possible. By the end of today, we could come down and grab the people that got in. They got in, they're long, but they put their stop where they think nobody's going to get it, right? This is another big kind of danger, is if you think, oh no, this is going up. That's when you would move your stop and take one position and turn it into like a position. So if we turn a scalp into a long-term trade, just keep moving the stop for like 1,000 pips on a 1K. You're only down what, $100? So, but yeah, I mean, it's brutal, huh? Okay, looks like I'm gonna put up another buy in there. I think I might have got filled on that limit, and yeah, it's pretty psycho today. And here, selling last night, or this is about 3 o'clock in the morning, big choppy distribution up here. But if you take the time and put the top becomes a bottom, there's several head and shoulders stuffed in here. You kind of have to, and then here's the failure swing, and oh yeah, on the bottom, RSI is diverging. So the RSI is a nice trick. Very tricky. Gives you a beautiful. Look at this 2-period. Look at this divergence down here on the 5. So here was a great trade. If you were babysitting the market, looking at the screen, see this double bottom in RSI, and that was your entry there. So plus, not only was it your entry, but it was a stop hunt for the guys back here. So. It's pretty bombastic, don't say, crazy stuff, right? Get all this up and downness. They love it. The market makers just love to punish in both directions. They don't discriminate, I don't care if you're a bull or a bear. You got MACD running, and they're just so you know that no central bank is watching RSI and MACD trying to trick you. You're just not seeing that for them. The thing that matters for them is price. That's anybody ever shops his price. Nobody shops MACD when you go to the store.